will revise chapter 2, which talks about basics of goods and service tax. So here we would be covering various sections read with schedules. Section 7, which talks about the meaning and scope of supply, has to be read with schedule 1, 2, 3. Then coming to section 8, which talks about the taxability of composite and mixed supply. Then section 9, which talks about normal scheme or charge of GST. Then section 10, composition scheme. There are two categories of composition scheme. Then 11, exemptions under GST. All these are CGST Act. Means all the sections are covered under CGST Act. Now let us see one by one. Meaning and scope of supply is covered under section 7, which has various subsections and clauses. First, 7(1)(a). Supply includes all forms of supply of goods or services or both, such as some examples: sale, transfer, barter, exchange, license, rental, lease or disposal for a consideration in the course or furtherance of a business. So for any activity or a transaction to be a supply, as per section 7(1)(a), it should have three characteristics at least. What are those? It should be a supply of goods or services. Sir, what if it is anything else other than goods or services? It is not a supply. Then it should be for a consideration, and consideration need not be always in money. It can be in kind also. Then it should be in the course or furtherance of business for the supplier. Only then an activity can be supply as per 7(1)(a). Then they also defined what is goods, what is services. Anything other than goods or services is not a supply. It is not at all covered under GST, guys. Goods is defined under section 2, clause 52. Means goods means every kind of movable property, but other than money and securities. Money and securities is not a goods. Okay. And if you are agreed to sever anything which is already attached to the land to supply it either in the future date, in that case, that is also a supply of goods. Then coming to services, which is defined in section 2, clause 102. Services means anything other than goods. Anything other than goods, but it does not include money and securities. But if you are doing anything in the form of conversion of one form to another form, or from one denomination to another denomination, for which separate consideration is charged, then it will be a supply of services, or it will be a services. Okay. Then, and in simple, money and securities is neither the goods nor the services, guys. Chalo. Then coming to 7(1)(a), activities or transaction by a person other than individual, means supplier cannot be an individual, okay, to its members or constituents, or vice versa, for cash, deferred payment or other valuable consideration. Means here the supply is taking place by a person, anyone other than individual, to its members or constituents. Simple, the supply made by the associations or the community or clubs to their members, but for a consideration. Yes. Next, 7(1)(b), import of services for a consideration, whether or not in the course or furtherance of business. So only two conditions are here. Import of service should be there for the consideration. Whether you imported the service for business purpose, professional purpose, personal purpose, doesn't matter here. Doesn't matter. But consideration should be present. Then 7(1)(c) is linking to schedule 1, guys. 7(1)(c) is telling the following activities or services, whichever is referred in schedule 1, even though without consideration, still they are supply. We call them as deemed supply. So there are 4 activities covered here. So if these 4 activities, even without consideration, still they are supply. But some conditions are given only if it is met. Chalo, what are those? One by one. Para 1. Permanent transfer or disposal of business asset on which ITC has been claimed. Sir, I had purchased some asset for a business on which I have claimed ITC, that is input tax credit. Now I am selling that asset or disposing that asset free of cost. In that case, when you have purchased, you have claimed the benefit of ITC. So at the time of sale, you have to pay tax on it. And on what value and all, valuation rules will help you there to calculate the value of supply. Chalo. So, but transfer of entire business as a going concern means A Limited has been sold to B Limited. Is it a permanent transfer of assets? No, because the business will continue through the successor. Next, it is not a supply. Then come into para 2, supply between related person or distinct person made in the course or furtherance of business. So if there is any supply between the related person or the distinct person, it is always a supply, even though it is without a consideration, but it should be in the course or furtherance of business. So condition is supply should be between related person or distinct person, and it should be in the course or furtherance of business. So related person includes many people. Normally your blood relatives are covered, plus in addition to them others also, means who are controlling each other, or officers, employer, employee, like that. Then if employer is gifting anything to the employee up to the value of 50,000, it is not taxable. But if it is more than 50,000, yes, it is taxable. Fine. Sure. Then coming to third para, supply of goods by a principal to his agent. See, if there is any supply of goods from principal to agent and further goods are supplied by agent to customer. So agent to customer, it is a supply. But when the goods are supplied from agent to customer, in whose name invoice is given. If invoice is given in the name of agent, then there are two supplies. One is from principal to agent without consideration as per para 3. And the another one is agent to customer. That will be as per 7.1a. Obviously, consideration will be present in that case. Vice versa scenario is also covered. That is, sir, assume agent is purchasing the goods from the supplier and giving it to the principal. So principal has appointed the agent to purchase the goods on behalf of him. So when supplier supplied the goods to the agent, supplier has issued invoice in the name of agent. And then agent has supplied the same goods to the principal later. In that case, again, there are two supply. From supplier to agent as per 7.1a, from agent to principal, it is as per para 3. As per para 3. In simple, in both these cases, if the invoice is issued in the name of agent, then it is a deemed supply between principal and agent. If the invoice is issued straight away in the name of principal, then there will be only one supply, and that supply will be as per 7.1a. Okay. So your supply of goods by a principal to agent or vice versa should be there, and invoice is issued in the name of agent. Only then para 3 will attract. Then coming to para 4, there is the import of services without consideration by a person from a related person or from any of his establishment outside India. Means who should be the supplier outside India? He should be related to you or your own establishment set up outside India. And it should be in the course or furtherance of business. Means personal services are not covered here. Conditions are there should be an import of service, then from a related party or establishment outside India. That means there should be the supplier. Then it should be in the course or furtherance of business. Then coming to 7.1 capital A. 7.1 capital A will tell if there is a supply as per subsection 1, then 7.1a read with schedule 2 will tell whether it is a supply of goods or supply of services. Chalo. So different supplies, whether it is supply of goods or services. If there is a transfer of title in the goods, always supply of goods. If there is a transfer of right in the goods, like renting, leasing and all, it is always supply of services. If there is a transfer of title in the goods, but not today, but in a future date, in case of hire purchase, EMI and all, still it will be a supply of goods only. Then land and building. If land and building is rented out, lease or tenancy is given, then it is always a supply of services, including land as well as building. Then any lease letting out of building is always a services. Then treatment or process. If a person is carrying out any treatment or process for someone else's goods, it is always a supply of services like stitching, tailoring services or dyeing services, so on down. Yes. Next, transfer of business assets. Goods forming part of business assets are transferred or disposed of by or under the direction of a person carrying on the business. So business assets has been sold off. Okay. If it is with consideration, 7.1a. If it is without consideration, check para 1. Is it applicable? If yes, it is a supply of goods. Next, business goods, if it is used for personal purpose by the owner or any of the employees, then it will be a supply of services. Title is not transferred here, but still it is the supply of services. Ownership is still with the business only, but only it is used by the particular person, either by the owner or employees for private purpose. Then, sir, goods forming. Assume a company was having various goods or stock or inventory. Now they are closing down their business. In that case, on the date of closing down their business, it is deemed that they have supplied all their goods or stock or inventory. So it is supply of goods. Exceptions are there, means in the following case there is no supply. If the entire business is transferred as a going concern, then we will not call it as seizing. Seizing means what? Closing down, complete close down, winding up. Then business is carried on by a personal representative, means still show is going on. Still show is going on, but by a other person. By a other person. Chalo. Immovable property. Renting of immovable property is always a supply of services. Construction or sale. Construction of a building for sale. If it is sold before the construction is completed, it is what? Supply of services. Sir, what if the building is sold after the construction is completed? It is covered in negative list. It is covered in negative list. Sir, when the construction is said to be completed, earlier of 2 dates. What are those? date of obtaining the completion certificate or the date of first occupation, whichever is earlier. If part of the consideration is also received or full consideration is received before this date, it is considered as sale of pre-construction building. If entire consideration is received after this date, then we will call it as sale of constructed building. Okay. Next, intellectual property right, temporary transfer or permitting use or enjoyment of any intellectual property right. It is always a supply of services. Information technology software, development, design, programming, customization, adaptation, upgradation, enhancement, implementation of IT software. It will always be a supply of services. Any supply of IT software would be service. And here IT software means not income tax, information technology. Then action, agreeing to do something, not agreeing to do something, or refraining from doing something, or tolerating something. Tolerating something for which consideration is charged. In that case, it is always supply of services. Then in case of composite supply, works contract services, that is construction service also is there, plus goods also are involved. But in the GST, they have given a clear-cut clarity, it is purely supply of services. Then in case of restaurant service also, both the components are involved. Food items, which is goods, plus services. But still, completely it is supply of services. Then coming to section 7 subsection 2, read with schedule 3. Section 7 subsection 2 will tell whatever is covered in schedule 3 is neither the supply of goods nor the supply of services. We call it as negative list. So what are those? We have a shortcut, learn A, B, C, D, E, F, G, H. I have given it in the same order. Here I have given it in the same order of the shortcut. Chalo, what are those? Sale of land and sale of constructed building, that is after construction is completed, post constructed building. Then actionable claim. Goods includes actionable claim, but here actionable claims are excluded. Means here it is covered in negative list on which GST is not applicable. But on 3 actionable claim, GST is applicable. What are those? Lottery, betting, gambling. So lottery, betting, gambling is not covered in negative list, guys. Okay. Then services of funeral, burial, crematorium or mortuary, including transportation of deceased. There is when a person has died. So if any of these services are taken, it is completely not covered under GST. GST is not applicable. Any services provided by court or tribunal. Then 5th one, functions performed by members of MP, that is members of parliament, members of state legislative, that is MLA. Then members of panchayat, members of municipalities or members of other local authorities. Simply politicians. Duties performed by any person who holds any post in pursuance of provisions of the constitution in that capacity, like President of India, like Vice President, Speaker, or any persons like that. Then duties performed by any person as a chairperson or a member or a director in a body established by central government or a state government or a local authority. For example, chairperson or vice chairperson of GST council, for whatever service they provide, they will be paid for it. But still, the services are covered under negative list. Then services provided by employee to the employer in the course of employment. In simple, employment service. Then 7th one, supply of goods from a place in a non-taxable territory to another place in non-taxable territory. In simple, foreign to foreign supply. And nowhere connected to India. Nowhere connected to India. Last one, supply of warehouse goods to any person before clearance for home consumption. Means you have imported the goods, you have not yet paid the import duty, the goods are still in the warehouse. Before you take the goods, you have already find a buyer and you have sold it. So it is covered in the negative list, hence GST is not applicable. So on all these items, GST is not applicable, guys. Chalo. Then coming to section 8, which talks about taxability of composite and mixed supply. So first, multiple supply. What is multiple supply is when 2 or more goods or services or both have been supplied for a single price where there is no breakup given. In that case, we call it as multiple supply. We need to check whether that multiple supply is a composite supply or mixed supply. When multiple supply is a composite supply is if it is naturally bundled. Means majority of the customer expect it to be purchased together. Or the seller, supplier, supply it in his ordinary course of business majority of the time in together for a single price. Then coming to mixed supply. Sir, multiple supply which is not naturally bundled is a mixed supply. Is a mixed supply. So they have been defined. What is that? We will see. Composite supply is defined under section 230. Composite supply is a supply made by a taxable person to a recipient consisting of two or more taxable supplies of goods or services or both or any combination thereof, which are naturally bundled and supplied in conjunction with each other, means together, in the ordinary course of business, one of which is a principal supply. Sir, what is principal supply means? Which is having predominant position. Means, sir, because of this only, the other things have been supplied. So, the other things are ancillary for this supply. So, even section 8 has told, whatever is the rate applicable for principal supply will be applicable for the entire value of supply for the composite supply. Example is charger supplied along with mobile phone. So here, which is the principal supply? Mobile phone. So whatever is the rate applicable for mobile phone will be applicable on the entire amount. Then coming to mixed supply, it is defined in section 2 clause 74. Mixed supply means two or more individual supplies of goods or services or any combination thereof made in conjunction with each other, that is, they are also supplied together for a single price by a taxable person for a single price where such supply does not constitute composite supply. Means what is not composite is mixed supply. Okay, means multiple supply which is not composite is mixed supply. When a supply will not be a composite supply, when it is not naturally bundled, when it is not naturally bundled. So what will be the rate applicable for mixed supply? In section 8 they have told, whatever rate is the highest rate within the package, that will be the rate applicable for the entire package. Example, gifts pack comprising of chocolates and sweets or dry fruits. Sure. Then coming to section 9, which talks about chargeability, and this is normal levy. Normal levy, where you have to pay tax at normal rates. GST is levied at the point of supply, that is the time and place of supply, and that's when the liability to charge GST arises. And time and place of supply, we would be learning it in next chapter. So GST will always be levied on value. On what value? The value we will calculate as per section 15 at whatever rate is applicable. And different rate will be applicable for different goods or services, guys. And we have to know whatever goods I am supplying, what is the rate applicable for it, and I have to collect the same from the recipient and give it to the government. Chalo. If not, I have to pay out of my pocket. Liability to pay GST. Who will pay GST? Under GST, in majority of the cases, forward charge mechanism would be applicable, where supplier is liable to pay GST. So liability is on supplier, but can he collect it from the recipient and give it to the government? Yes. So he can collect it from the recipient and give it to the government. Can recipient claim ITC of this? Yes, subject to conditions. Then coming to reverse charge mechanism. As per section 9.3 and 9.4, government has notified certain cases where RCM is applicable. In case of RCM, the recipient is liable to pay tax. So liability itself is on him. So he is the one who has to pay tax and file the returns with the government. Sir, can he claim the ITC of the tax what he has paid on his inward supply under RCM? Yes, he can claim. Yes, he can claim. And all the provisions of the act will be applicable in case of RCM to the recipient. Chalo. Then coming to composition scheme, section 10 talks about composition scheme. See, whoever is covered under normal scheme, that is section 9, they have to pay tax at whatever is the normal rate. It might be 12%, 5%, 18% or 28%. And they have to file monthly return, GSTR1 and 3B every month, and they should file one annual return. So the compliance burden might be more, and also the tax amount might be more. So in case of if you are doing any small business or profession, then if your turnover is within certain limit, you can opt for composition scheme where the rates are kept lower. Even the compliance burden also is less here, or compliance work also is less here. Chalo. Who is eligible? There are two categories of composition scheme under section 10. One is under 10.1 and 10.2. Another one is under 10.2A. So under 10.1 and 10.2, who all are eligible? Manufacturer of any goods except certain notified goods, trader of any goods on restaurant services. If their aggregate turnover in the last financial year is up to 1.5 crore, and in case of 8 special state, if it is up to 75 lakh, yes, in the current year, they are eligible. They are eligible. And what are the composition rate applicable in the current year? They would be paying tax quarterly, not monthly. They will be paying tax quarterly, but they have to file their return, annual return. But there are 2 annual return. Okay. What is the tax rate? For the manufacturer, it is 1% of total turnover in the state, and for a trader, it is 1% of taxable turnover, and for the restaurant services, it is 5% of the total turnover. Okay. Then 10.2A is telling this is a scheme which is available for those who are not eligible for 10.1, 10.2. Means if you are purely a service supplier, okay, just a second. So now 10.1, 10.2. If you are engaged in any of this, manufacturing, trading or restaurant, you can also provide an additional marginal service in addition to this. Okay, but it should be within some limit. What is it? That is, if you're a service supplier, that is only restaurant, or manufacturer of goods or trader of goods. In addition to any of this, you can also provide one small service. But the turnover from that service cannot exceed 10% of the turnover of last year or 5 lakh, whichever is higher. If it crosses, then all your businesses are not eligible for 10.1 composition scheme. And 10.1 composition scheme, the aggregate turnover is 1.5 crore. Whereas for 8 special states, it is 75 lakh. Which are those 8 special states? Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Uttarakhand. Clear? Means these are the 8 states out of the 11 states. As per Article 279A, 11 states are special. But out of that, only 8 are covered here. Okay. Next, coming to 10.2A. 10.2A is open only for those who are not eligible for 10.1. So here they are telling, if you are a service supplier purely other than restaurant, or else you are supplying goods as well as service, but you are not eligible for 10.1, you can be covered under 10.2A. But your aggregate turnover in the last financial year should be up to 50 lakh. No segregation for states. For all states and union territory, it is 50 lakh only. What is the tax rate? Composition tax rate, 6% of the total turnover. And how to calculate aggregate turnover is given in section 2 clause 6. It has been defined, and this is for the entire act. What is it? It includes taxable outward supply plus exempt supplies plus export plus interstate supplies of a person having same PAN to be computed on all India basis. But it does not include GST, anything levied under GST, that is CGST, SGST, UTGST, IGST or compensation cess. Aggregate turnover will not include that. Then coming to the conditions. So the conditions are same for both the schemes, which are given under section 10.2 for 10.1 scheme and 10.2A for a special new composition scheme. What are those? The following persons cannot opt for composition scheme. A person engaged in supply of goods or services which are not liable to tax, that is non-taxable supply, on which GST is not applicable. Then a person who is availing composition scheme cannot supply the goods or services outside the state, but he can purchase. Then a person engaged in making supply of goods or services through electronic commerce operator, on which electronic commerce operator is supposed to collect TCS. Next, a person who is manufacturing ice cream, pan masala, tobacco products, aerated water, fly ash bricks or fly ash aggregate with 90% or more fly ash content, fly ash blocks, bricks of fossil mills or similar siliceous earths, building bricks and earthen or roofing tiles. If you are a manufacturer of any of these goods, irrespective of your turnover, you are not eligible for composition scheme, both the scheme. Sir, what if I am a trader? You are eligible. Next, casual taxable person and non-resident taxable person, irrespective of what they are supplying, they are not always eligible. Then coming to conditions and restrictions, which are same for both the schemes. See, at any time during the current year, to check the eligibility, we check the last year turnover. If it is within the limit, yes, in the current year you can opt. That doesn't mean that in the current year, throughout the year, you will follow composition scheme. During the current year, on any day, if you cross the limit of 1.5 crore or 75 lakh or 50 lakh, as it is applicable for you, then on the same day, you have to go to section 9. You have to immediately switch to normal scheme. Then, if you are covered under composition scheme, you cannot collect tax from your recipients. You cannot claim ITC on your inward supply. You cannot issue tax invoice to the recipients. Instead of that, you have to issue bill of supply for your recipients. And the recipients who has purchased the goods from composition supplier can never claim ITC. Chalo, notes. The condition and restriction is same for both the schemes. Then, if you are having multiple businesses, then all businesses should be under composition scheme or all should be under normal scheme. Even if one business is not eligible for composition scheme, all your businesses should be under normal scheme. And assume you have multiple registration. All your registration should be either under composition scheme or under normal scheme. Even in one state, if you have supplied the goods outside the state, then that particular registration is not eligible. So all your businesses or registrations has to come under normal scheme. Then coming to advantages and disadvantages. First, advantages. No classification of goods are required. In case of normal scheme, I have to classify based on HSN code of my goods or services. I have to classify and check what is the rate applicable for my goods and pay the tax at that rate. But in case of composition, I will pay tax at straight forward rate, composition rate, which is 1% or 5% or 6%. Then single GST rate is applicable on all supplies made, irrespective of what goods or services I am supplying. Then no requirement to issue tax invoice to the recipient. Then payment of tax is quarterly and return filing is done annually. So your compliance burden is reduced. Coming to disadvantages, you cannot claim ITC on whatever tax you have paid on your inward supply. Then he cannot charge tax on the supplies made by him. That is, he cannot collect the tax from the recipients. He has to pay out of his pocket only. Then even the recipient, whoever is purchasing the goods from composition supplier, cannot claim ITC. Then the person who has opted for composition scheme cannot carry the business outside the state. He cannot supply the goods or services outside the state. Then coming to explanations. Explanation is talking about some adjustments for the aggregate turnover, which are given as per section 2(6). So we have already understood what is the aggregate turnover as per section 2(6), which will remain same for the entire act. Now explanation 1 to section 10 is telling, let us take whatever is the aggregate turnover is given under section 2(6) with one small change. So aggregate turnover includes all exempt supply except one exempt supply. One exempt supply, which is financial service. It is exempt. But while calculating the aggregate turnover to check the eligibility, we will check which year's aggregate turnover, last year's aggregate turnover. So aggregate turnover is as same as 2(6) definition, but it will not include one extra item. The exempt supply, that is value of exempt supply of services provided by way of extending loan, deposit or advances, insofar as the consideration is represented by way of interest or discount. Simple financial service. Clear? So aggregate turnover for the purpose of checking the eligibility will not include this one extra item in addition to 2(6). Then explanation to section 2(10) is telling, while calculating the turnover to pay tax in the current financial year, it will exclude two things. One is as same as explanation 1 and another one is extra year. And this is to calculate the turnover in the current year on which we have to pay tax. Clear? So it is same as 2(6). Two exclusions are there. One exclusion is as per explanation 1, copy paste, and another one is, this is applicable only in case of first year of your business or profession. So last year your aggregate turnover was 0. So in the current year you are eligible for whatever composition scheme you want to opt for. Okay. Then check what is the aggregate turnover limit applicable for you for registration purpose. And from your total turnover, remove that. Only on the remaining turnover you pay tax. Means whatever is the turnover limit applicable for registration purpose, on that you will not pay tax. This is only in the first year of your business or profession. This is as per explanation 2. Okay. Then coming to the last section under this chapter, exemptions. Exemptions can be notified only by the government. Section 11 is giving power to the government to notify any goods or services through a notification or special order that the following goods or services is exempt. But any exemption given by the government should be in the public interest, and it should be based on the recommendation of GST Council. So there are two types of exemption, general and specific exemption. General exemption is given by way of notification, whereas specific exemption is given by way of special order. So general exemption will be normally goods or services specific. Anyone who is supplying that goods or services enjoy exemption. Whereas the exemption, that is specific exemption, will be person specific or purpose specific. Only the person who is supplying that goods can enjoy the exemption, not others. Or else purpose specific, only charitable services is exempt, or only educational services provided by the college or school is exempt. These are specific exemption. Oh. Then coming to general exemption, it may be absolute or conditional. Absolute means no condition, enjoy full exemption. Conditional means exemption is subject to certain conditions. If it is absolute, then the supplier cannot collect tax from the recipient more than whatever is effective rate for him. If he is enjoying full 100% exemption, then in simple, he cannot collect any tax from the recipient. But in case of specific exemption, no such distinction is there. Then general exemption can be partial or total. For example, 100% exemption can be given where supplier will not pay any tax. Partial means 50% exemption, 30% exemption, 70% exemption, something like that. But in case of specific exemption, it will always be total. And whatever exemption is given by the government either by a way of notification or through a special order, can be explained within 1 year from such date of notification or special order. And any explanation given will have a retrospective effect, guys. It will not have prospective effect, it will have a retrospective effect. Then coming to the difference between zero rated supply, nil rated supply, exempt supply and non-taxable supply. Zero rated supply includes the export of goods or services outside India or supply of goods or services to SEZ or SEZ developer. And in case of zero rated supply, input tax credit can be claimed on inward supply. Next, nil rated supply. These supplies are taxable, covered under GST, but as on today the rate are zero. And ITC can, if I am supplying any goods on which nil rate is applicable, so on my outward supply I am not paying any tax. So on my inward supply I cannot claim input tax credit. Examples are salt, grains, jaggery, etc. Exempt supply. So exempt supply means which do not attract GST, on which GST is not applicable as on today. It has been exempt through notification or special order. And here also, if my outward supply is exempt, then on my inward supply, even though I have paid tax, I cannot claim input tax credit. Example, fresh milk, fruits, vegetables or bread, etc. Then non-taxable supply or non-GST supply means on this GST is not at all applicable. These products or services are not at all covered under GST. Example, alcohol, petroleum products, even the products or services whatever is covered under negative list also will come under non-taxable supply only. Now, sir, can I claim the tax of what I have paid on my inward supply as input tax credit? No, you cannot claim. This is all about the revision of chapter 2, guys. Thank you.